Hi everyone, I'm Bag of Don at StockMarketCaddy.com, and today is February 25th at 8:32. We're showing you a page of our website where our private members go every night, and we make them a video view of all of the markets through the eyes of our swing machine and our other algo systems to give them an indication as to what is coming in the markets. Now what I wanted to do, I just wanted to take a few minutes, and this is the video that we posted last night, which would have been the 24th. So let's go back in time here, and I think I have the right one right here. This is on the 20th. Yes, in fact on the 20th. Let me be certain. Yes, it is. This is the 19th. And I'm going to tee this up and let you listen to a small segment of what we told our members on the 20th. And then I'm going to ask you what you could have done with this information. Hold on. Okay, so what I'm going to do is expand this video. This is what would be sitting on your computer when you want it. We make such a video every night looking at all the key components through the eyes of our algos. And I'm going to play this though. This goes back to the 20th, which was, let's take a look at the date. The 20th was Thursday now. Thursday, not Friday, Thursday. Here we go. Look at Dow Theory, SPX, and there's nothing wrong with that trend, and that's what's going to have people fooled. The SPX is still showing a very healthy trend. FedEx still very healthy.
Order
the
filled.
Yield curve. Okay, let's see the problem. So I'm going to open up the microphone. We're making the video for the members tonight, and we are going to actually bring this in so they can see this. This is the problem. The yield curve. See the yield? This is the yield on 90-day paper. It's not 15.38%. It's 1.538. Okay, and it is in an uptrend. It is rising. This is the yield on 5-year treasuries, 1.370. Does it make sense that you give the government your money, a treasury, and get a yield of 1.5 for 90 days when they will only give you 1.37 at 5 years? No. That means it's inverted, and it's been inverted with a 5-year. But remember, we were pointing out last night, we were within 23 basis points last night, 23 basis points of inverting with the 10-year. Look at the 10-year, 1.525. 90-day, 1.538. We just inverted today with the 10-year. That's a problem. Okay, folks, and I want to show you just a little bit more. Okay, now I'm going to show you, and I did this a little out of sequence, I'm going to show you the very same video that we did that night, and let me expand it. And this is how we opened, and what we were showing is the Nicholas timing model had just fired short on the 20th. Do you see this? It had fired at 5 p.m. Now we were doing this video a little bit later that night. Now the TPC is something different, but the Nicholas is our timing model, and it had just fired. The Dow was short, was up 450 already. The Nicholas was up 875. The ES was up 587. The Russell was up 255, and the VIX was long. It went long on the 19th and was up $1,000. Now listen to what we had to say, and then when we finish this, I'm going to show you where the Nicholas is tonight. It is February 20th at almost 10 p.m. I was eager to do tonight's video, and I want to apologize. I got a couple of phone calls from a few people today that my eyes must have been glazed over. I did last night's recap on the market, which we do regardless every night. Sometimes it's a little later than I want, but last night must have been about midnight, and my eyes just glazed over. The VIX daily component had in fact fired long, and it is up from yesterday's call at 5 p.m. to $1,000. Let me explain for the benefit of new people what that means. Last night this fired long. The Nicholas markets were still all long as well. That's a condition that can't last. We know once that happens, one of two things has to happen within about 3 days' time, if not sooner. The VIX needs to go back short, or the markets will roll over and go short. That's the way it's been, and there are reasons for that. The VIX went long, and I really should have pointed that out. It was a harbinger. It was a warning shot, and then sure enough tonight, the Nicholas. Please disregard the TPC for a moment. The Nicholas Dow, NQ, ES, RTY, all fired short tonight, fall through, and at 5 p.m. So Nicholas is now in an official short position. The TPC is a micro, it's not a micro, it is a intraday trending strategy that we've been employing, and that had just a super day today. So, and that one trade went off at 11:05, and it's up $2,300 intraday, intra-evening, if one is still holding it. Now, for the benefit of new people, to put a mini contract on each of these markets, all four, including the VIX, calls for a sizable commitment. One must have a trading account if you are going to put this on an overnight basis, in excess of 50,000, at least. When you carry mini contracts overnight, the rule of thumb is to have at least 2 to 3 times the original margin for each contract. So you can do the math from there. So that would be a very sizable trade and commitment, and I don't think anybody should really do that in the beginning. You need to develop your own confidence in the Nicholas and to see what it can and cannot do. It does not get every single trade right, so please know that. It has had some losses. We've had a few losses in the neighborhood of $5,000 to $6,000 in total, and we had one loss close to $10,000 that I recall. We have had run-ups of, both on the short side, high watermarks of 72,000. The average length of the trade over a period of years is about 5 to 6 days. However, sometimes the trade can last weeks. So we don't know. The signal is on. It could lose and reverse tomorrow. It's very sensitive and is meant to pick up these market vibrations. Or we could be looking at this 3, 4, 5 weeks from now, and it could be, up 60, 70,000. So what to do with it? One could use it just as a barometer of the tenor of the market as to where we are and how you might want to position and what you might want to be doing with stocks and with options. One might use just one contract. One might use a micro or 2 contract. One might use options. Entirely up to you. But like with everything, we can't make recommendations to do anything, and we're not making a recommendation. We're just pointing out what the algo is showing us, and then it's up to each person to incorporate it into their own formulation as to what they may or may not want to do. Okay? So I apologize about missing that last night, but others were watching and said, hey, that's long, and they took corrective steps. We're early. Trust me, nobody is looking at what we're looking at. Okay, folks, I hope you understand that. at least some of the detail and some of the timing. So when you ask me, and feel free to ask, and feel free to look at our website as to what the cost of subscribing to Stock Market Caddy is, but think of the value. Was that a market call, or was that a market call? Let me show you something. Now, the markets are running a little bit tonight, but do you see the Nicholas timing model from the 20th? That contract is now up 11,004. The Russell, 5,771. The VIX, 5,000. The YM, 9,900, was up higher. And the NQ, 14,000. We were up when we started this video, we were up over $50,000 in just 4 days. We have done this before. Nicholas has done this before. And this is how we manage and trade the markets. And this is how our members, because they have this very same Nicholas package sitting on their computer. And so they can, listen to the video from us each night, or they can have it on their own computer to make their own calls. I'm Bag of Don at StockMarketCaddy.com. If this approach to the market interests you, feel free to give me a shout, 813-758-8263. We wish you the best.